Good morning, everybody. Well, a real market drop. What do you know? We'll see where does it go for real this time. And of course, what jolted the markets so much, so suddenly? Charts. You guys always want to see charts. All right. Here we go. Charts. So relatively large gap here this morning. Good morning, Fabio. But as always, when we look at a minder in the morning and we see what's up and what's down, the next step is up or down to where? So something might look very ominous, and maybe it is, but in this case, we've got the S&Ps gapping down to an area of major support, and there's a pretty big number, level there, since we've got all of these sideways bars there. Remember, this is where we talked about things had to tighten up, and they did. And then last week's initial gap down and, buying the dip. And so one of the concepts and really things that I've learned over the years is, we look to the left, we look at price support, and it's like, how much do I respect it, so to speak, or say it's of real value to me that it's going to hold up as such, support being an area that buyers are going to show up there, and it's likely to hold prices. Well, one of the concepts is, has it ever been used before as support? Because once it's been used as a reference point, it's like anything else. It's kind of used up. It's not brand new anymore. So, a little less of value than it was initially. And so this was used once before, and usually the first time it's used, it's going to be the most reliable. Now, this pattern that occurred here with the new high and then yesterday's reversal, which kind of seemed like came out of the blue, kind of. As far as I can tell, seems that it's connected to the reversal up in interest rates, which the pattern did suggest it was going to happen, and why we put it TBT in our ETF letter as a buy, just based on the price pattern, but it had a pretty decent move. And so now we've got a big gap down. So one of the things, right, there's so many things to consider, especially as a short-term trader, is that how long did it take and how far did prices travel to get to a destination? And when we say destination, we're talking about support and resistance. What's to the left? What's the reference point? So yesterday, prices traveled relatively far. You can see the size of the range here. It's a little bigger than these, and a whole lot bigger than those, because as prices are advancing in, I'd say, a way of displaying certainty, the ranges are relatively small. The same thing on the downside, something that has lots of supply overcoming demand, and it's a very controlled range trend. The ranges are relatively small, and it was like, we're here. Now it starts getting whippy. They tightened up, and now we got this big range, and now this big gap down. So I suspect, gapping down to this area of support, it initially, who's going to want to be shorting on support? Or well, people will sell, because just out of panic, those that are long, emotions take over rather than logic, and saying, well, it's gapping down, and this could be applied to any stock. Of course, the analysis is the same. Logic to say, what, we traveled a long way yesterday, and now this gap down is even a further distance that it's just happening on, air, so to speak. We know the futures have been trading and trending down. But anyway, as it gets down to the support level, the best thing to do is, wait 5 minutes, or you might say wait 30 minutes. Becomes a choice. You assess what's going on there and then see how things react there at that reference point after 5 minutes and then after 30 minutes. So prices aren't bouncing here, but the momentum is slowing down for the moment. How do we read that without indicators? Well, we just look at the price action and we see how things were going sideways here for a couple of hours. And then the momentum picked up and we got a green bar reversal. And so while there's been no green bar reversal yet, it's going down at a little less angle of descent. It doesn't mean it can't pick up, that's for sure. But what we would look for is a green bar reversal here. And then we look at the distance between the green bars, or, as it begins to pivot. And that's how we recognize slowing momentum. And, your indicator of choice, how it's calculating things, is doing something similar to that, where, again, there's so many different indicators, who could even imagine how each one is calculated. But the simplicity of this is just saying, hey, that was a pretty decent momentum move out of a consolidation. And now this one, which is a resumption of the trend. And then once you get stabilization in the green bar, you say, well, this one is a lot less than that one. So momentum is slowing down, and your indicators would show a bullish divergence. So prices are on support. We're going to see what they're going to do. It's only Tuesday morning, but we're going to be very interested by Friday to see if the buy the dippers come to the rescue and turn this into a bottoming tail bar, or whether it's going to be a red bar. Well, it's already a big red bar. It's down here already. Whether it stays down there or whether it becomes a bar that moves down, below this into the void, be going down to the rising 50 MA. We'll get a better idea of that later today. All right. Qs. All right. We knew tech was in trouble. And one of the things I wrote in the letter, like transports were making new all-time highs, the S&P new all-time highs, Dow new all-time highs. And tech is the fly in the bullish ointment. It was like, is this going to pull the rest of the market down? And in part, it is. The other part, I'll just go to it for the momentarily, was the move up in the 10-year back above 1.6%, which got, markets are inflation focused because the Fed is in denial. They're not really in denial. They know what's going on. They know wood, steel, food, gas, copper, aluminum, and so on have all gone up a lot. And to say there's no inflation, it's like, hey, come on, how long are we going to lie to each other here? So, interest rates moving up a bit there. And yes, transitory, nothing to worry about. Checks in the mail, right? It's kind of like the Fed telling us about inflation when we see all the charts, and somebody that owes you a lot of money. No worries, Greg. The check's in the mail. You can probably have it in another 2 days. Yeah. Okay. So where's TBT? Yes, TBT. It's it. Utilities. TBT had a nice day yesterday, stopped at the 50, but we got a retest of a pivot and another reversal. And so if it clears here, I think that's get a little bit more attention. And look at the weekly chart. Nice little pullback and stabilization and starting to curl up there. So multiple time frame analysis. Those are the kind of things you look at. With that level, the shorter time frame is going down, and this one is, in an uptrend and stabilizing. Well, today is Tuesday, Jacob. So I don't know about SPX, but just looking at that, that's down here at, based on where SPY is, that's down here, and the same story. Let's see what happens. Can it hold this level? Now, with a big gap like that, the idea is, as I said, traveled a lot, big gap down here. If those that are short, or maybe somebody bought put options, that kind of reversing those positions should have a tendency of at least stabilization. So we'll see, at the open, how much stabilization there is or the lack thereof. And then, from there, there's really nothing to stop it from going down. Well, the 50's rising there, so we shall see. All right, let's look at the futures. Well, let's look at the Russell before we do that. It's still early. What a mess! What a mess! It was the big winner. Last year was really tight uptrend, buying the dip and all of that. But just a big mess now. Wailing up and down, and tails and breakdown failure and breakout and then failure and bottoming tail on the breakdown and up and back down. It's just a freaking heart attack. And so who knows where this is going to settle down. So we go to the higher time frame and, we see this sideways move. And if this closes the end of the week, down below these tails, nothing else to think but that it's going to go lower. Lower to where? Well, maybe $200, maybe further. We'll see. All right, futures. You can see ES is down there on the support. Same story there, so no point in reiterating. YM, which has been leading the way higher, this got up above 35,000. Right? I think it was right. And then, this is YM. The Dow Industrials got above 35,000. And then YM got to 35,001. Right? He got an extra tick up there just for good measure and then started the pullback. So, paying attention to whole numbers, important numbers, like, simply those whole numbers. And, like 34 kind of hung out there for a while. And this was the correction bar we spoke about last week. So as it got up to that next 1,000 level, it's like, hey, I mentioned it yesterday, and it's like, just hang up there for a while. And then, things just started to fall apart. And just see shortly after 11 o'clock. And so we'll just drag this up. And here's the big support, right? Real easy. It's stalled at these pivots here. It's kind of underneath it a little bit, but that's got room to move lower. It's not on support yet, but it was the stronger. It's often the case. And Qs, just breaking down, close below the 50, 13,000, right? Next big number there. So I think that's an obvious place. You got a whole bunch of overlapping bars there. As I look at this pattern and think about measured moves, certainly there, but sometimes you get a 3-bar drop. We'll see what recovery is, but a 3-bar drop and just looking at ranges, that was a big range yesterday. Big range. Actually looks bigger than this one. All right, so maybe it gets down here, right, step by step. Obviously, this is getting pretty damaged on the higher time frame, and that's where the big support is down there. But I think 13,000, if it should hit that, say by 10 o'clock, first or second reversal period. Odd numbers. Like what, Drake McGraw? Like 275. Oh, for the Qs, Deb, maybe. So one of the things that we do look at, right, when McGraw brings up odd numbers, is we look at, and we started looking at this a little bit more interesting because Trader McGraw has brought us our attention to things called gamma. Everybody knows what gamma is that trades options, but spot gamma. and put walls and call walls. And so the very interesting service out there. By the way, I reached out to them over the weekend, McGraw, about doing a webinar in 2 weeks at the end of the month, which we're going to arrange doing. So I think it's going to be super interesting. Yeah. So when we look at things like open interest and clusters of large open interest, which can be around an odd number, right? So you're going to your options tables and looking at where there's unusually high open interest, and a lot of times prices will gravitate toward those points. So it could be. So Deb is saying 275. Oh, Debbie, you're a little bearish on that thing, huh? 275. 275, Deb. Oh, you're looking for Armageddon here. 20%. All right. Well, let's take it a step at a time. 300's a giant number and there's a bottoming tail right down there. So, and the 200. So, if it was to fall down there real fast, I think you'd have a pretty sharp pop off of the lows. Yeah, Spider 400. I think that's a real possibility because there's nothing to the left. The 50 MA isn't lined up with anything. Internals being asked about by Mr. Blue Chips. Interestingly, I was surprised that breadth didn't get lower, but at least the option traders are starting to get a little more bearish. And one of the things I looked at yesterday, which I haven't looked at in a while because it hasn't been such reliable data, is what OEX option traders have been doing, which have considered the smart money. But in this market that's been so bullish and advancing, it hasn't been such a reliable piece of information. But I wound up deciding to look at it yesterday. And OEX option traders, right, remember, considered smart money, the regular option traders, and we don't really know exactly who all regular option traders are, but we know that retail traders that have small accounts like to use options to grow their accounts into bigger accounts, but some of them don't get educated. In any event, around here, up in this area here, the OEX options traders really started loading up on puts. So I was like, Greg, you should have been looking at that, but it hasn't been reliable for a while. So I haven't. In any event, lots of bearish trades of OEX option traders up here. And now, we see this breakout failure and this move down. But, breadth, as ugly as yesterday was, the breadth wasn't all that bad. And it was pretty darn good on this up day. So, we're not there yet with our internals to give us any kind of a signal. Let's get moving here. And all right, Qs, 13,000, this line down here. Bonds, down a little bit, interest rates up a little bit, not breaking through support or resistance, so really not a big deal. Oil coming in a little bit, up near the pivot high. And gold retracing a little bit there, look to the left at resistance, makes a whole lot of sense. Silver, right, backing off a little bit as well. And transports, which have just been like amazing. Topping tail. We'll see how far this pulls back. So there was, in a sense, nowhere to hide yesterday as far as longs. And McGraw saying Apple and Microsoft bouncing. Apple's on the 200 MA on the daily. Tesla's on its 200 a day on the daily. So we'll see some bargain hunting, and we'll see if they lift off of that support there. All yours, man.
All right, good morning. Yeah, the last afternoon sell-off there starting at lunch was vicious, and then when it couldn't bounce, I had a full bearish bias for today. I just didn't know what flavor the continuation would come in. a gap up, a gap down. So, 30-minute low, opening flat. Many times you get a 1, 2, 3 after a big down bar. And the spiders and diamonds have been much different. Qs, IWM. So let's see, open positions. We did a good job tightening stops on a lot of our opens, long directionals, and took profits on a number of things. We still have a little bit of Charlie India, a little bit of Papa Mike, gapping down, but any stop out will still be the profit. Hard, we have a nice open profit. I move stop break even on that, and it's gapping under it, so we'll give it 30-minute low. Fang, we had a put spread, 30-minute low. That's an ugly gap down now. We'll just deal with them one by one. In terms of bucking the trend on earnings here, Triple D looks fantastic. Nasty downtrend, 200, and now it's gapping up to $20. So 30-minute high. I like this as a bottoming pattern. Let's see, just anything green with a big old down market is strong. So O is strong, but the gap's too big. Parts, well, we'll check it out. 30-minute high, S wave, maybe day trade 30-minute high. Some, I like this bullish 4 bars here. Wide range breakout. As long as they hold the top end of this WR breakout bar, daily, weekly, monthly look really good on that. So that's going on the watch list, and these are all earnings stocks. Vittle, not much volume. We'll come back to you. IGT 1830, 30-minute high maybe, yesterday's high. JD, YouTube's asking about. There's a lot of continuation gap down trades here today. With a big market gap down, it's going to be hard to get on board, though. We got to see where we just got to, all shorts, we just got to wait 30 minutes to see how much they're going to bounce. I gave Playboy here as a short watch, gapping under this, kind of a head and shoulders looking thing. It's climactic on the weekly. The problem is they have earnings tomorrow. Yeah, I like Apple and Tesla at the 200, but once again, longs or shorts. I need more information. Thomas, just TZA. There's no great pattern. Did break out, gapping down. It's going to be hard finding a tier 1 setup right now. This looks like a, I don't like the way it's gapping and so forth. What's that? Inverse levered fund or something? Gapping up, gap's too big. I don't know. I mean, keep the ideas coming, but don't expect anything from me. Probably in the first half hour. Here's another continuation breakdown, but the gap's too big. But that's a beautiful, controlled, nasty decline. The gap's too big. NNOX, there's so many popular stocks getting slammed. I mean, look at Pelletier here. Nice fluid move down. It is bouncing, so that could possibly be a 30-minute high trade. Actually, I'll put that in this bottom right. So CNBC showed Kathy Wood's top 10 holdings. And yeah, her funds are getting slammed. And she's, trading the Teslas, a lot of the stay-at-home stocks, T-Dog, Chop, Twilio, all these high flyers that the weeklies have cracked. And just like her RK has cracked. You know, they were potential bottoming patterns. And then so many things have made another leg down. Look at Zoom, looks horrible. Teton had earnings the other day, but you know, so many things. T-Doc looks horrible. Roku, come on, dude. All right, slow data. All right, Tesla. I said yesterday to the close that this was going to be on my short watch list, but it was so extended intraday, I didn't want to take an overnight position. And I said my target is, it looks like it wants to go to the 200. Well, this morning, that's where buyers stepped up. Apple, we mentioned, and that's a nasty gap. 120, you know, it's gapping right above this 200 right here, right on this minor support where it started this late March breakout. Look at that, this gap over here was on earnings, got sold into. AI, recent IPO, look at that nasty trend. Looks horrible. Look at that, it used to be 180 bucks the day after its IPO. Now it's 50 and in less than 3 months. How does that make you feel if you're in a long-term investor? A Plug, remember this upside shakeout? We were shorting that the other day. That looks horrible. I have no idea where the bottoms are. Look at Jemiah. Nasty downtrend. But the gap's huge. I can't do anything with that. Stone, that's a ugly close yesterday. Ugly gap. Weekly has room to fall, maybe to 50 bucks. I mean, there's a lot of ugliness out here still. Parts we'll come back to. Mara. This was an upside shakeout. That was a beautiful entry right there. This is one of the Riot stocks, right? Mara, Riot. Upside shakeouts. Look at this Pelletier bottom right. It's getting a bid. Okay, so that's relative strength. Now, relative to the gap, the buyers are, well, you know, unless you go around and knock on their door and ask them, are they buying to open or buying to close if they have a short? But whatever the case, the summation is you've got a lot of demand right here. So Pelletier is a watch, McGraw put spread. VLDR, ugly breakdown. Now that one's, the gap's not as big. So that's a 30-minute low short idea. Vladimir. VLDR, putting that in a window. Look at this triple D. This was I posted this as a 30-minute high. That's relative strength also right now, not only because it gapped up, but it's rocking. Ugly gap on sale, but no entry. Enlock, relative strength, gap up on earnings, but no pattern right now. MODN, ugly gap, but no pattern. JCOM. There you go, over the high. I like that. Had a little breakdown failure. 30-minute high. I like that. Let's put that in a window. Both. I mean, you all know the drill. If I like it as a directional, then it's a candidate for a put spread. Tesla has rallied a lot more than Apple from the pre-market low. Let's see if we can get a higher low retest. S-Wave, 30-minute high maybe. McGraw put spread under yesterday's low. That's a bullish gap. Wow, index getting whacked. This is a, wow, that is ugly. You know, that's one of the vaccine companies. Well, Debbie, it's hard, right? It's only